Are you afraid to risk your hard-earned money in binary options? Well, binary options cashback.com give you an ability to invest your money without the risk of the initial deposit. How does it function? Would you like to invest in binary options but it scares you to think that you could lose your money? 1. Select any broker from our selected web banners. 2. Open an account and deposit the recommended amount. And 3. Send us an email to webmaster@binaryoptionscashback.com with the following details: name, broker's name, deposited amount, and the desired method to receive your money back, i.e. PayPal, money brokers, or bank account. And within a short duration of 30 days, you will get the return of the deposit. This advertisement comes with no obligations. We don't require any minimum amount of trades, and you can withdraw your deposit whenever you want. On the other hand, you can open an account with any or all brokers listed and receive a consequent refund.
Hello class, this is Brian from financialtrainingschool.com and welcome to BO106, Chart Timeframes. So this is a pretty popular question that I get from students all the time. They always ask me, what chart time frame should I be focusing on? Or what should I be looking at when I trade? Well, it depends on what expiries you're trading. Are you trading shorter time frames like 60 seconds or 2 minutes, which some brokers offer? Or are you trading 15-minute, 30-minute expiries, 1 hour, or end of day, etc.? So it depends on what expiries you're trading. Also worth mentioning that lockout periods ranges between as low as 2 or 3 minutes up to 15 minutes depending on the asset choice and time of day, so beware of that. So you may be trading 30-minute expiries, but the lockout might be 5 minutes and you're waiting for that 5 minutes to come and then you trade, so that's actually just a 5-minute trade, not really a 30-minute trade. So be careful of that when you're trading depending on your entry time. So for the chart time frames, I suggest you use the 2 time frames lower than the expiry. The reasoning is because one time frame lower rather than the current time frame allows you to see the current price and how far away the expiry is. Thus, this helps you determine how much leeway you have for your trade before the expiry comes. And then the 2 time frames lower will give you the precision and accuracy on the trade entry to increase your leeway. So for example, I trade 15 or 30-minute expiries, so I would use 1-minute or 5-minute charts for 15-minute expiries and 5 or 15-minute charts for 30-minute expiry. So that's what I would recommend you use when you're trading, using 2 time frames lower than expiry. But if you're not sure and when you're in doubt, here's the best advice I can ever give you, is to zoom out. Chances are you're probably zoomed in too closely and are focusing only on the past couple hours of trading. I don't trade like that. I used to do that in my newbie days. I used to zoom in really close so I could see exactly where price is and all that stuff, but that doesn't give you the whole picture. The point of trading is to get the big picture and then see where you are and then enter your trade. So the reasons why you might want to zoom out is so that you can see the price range, the time left, and the leeway that you have to trade. How far out? People ask me all the time, how far out do I zoom out? Well, you're zooming out, first of all, you're zooming out on the same time frame. I'm not saying to switch to another time frame. You're on the same time frame, but you zoom out to the point where candles still look like candles and not bar charts. So you zoom out all the way to that last point before they change shapes. Alternatively, if you wanted to, you could also switch to higher time frames. So if you're trading on the 15-minute charts for 30-minute expiries, you might just want to switch to the 30-minute expiries, or 30-minute charts, to see exactly what the 30-minute charts are looking like, so that you switch back to 15 for your entry or switch back to the 5 for your entry, depending on how you want to trade. And then lastly is, if you're not sure what expiry to trade, keep watching the lessons. Once you figure out a good strategy for yourself, you'll realize which expiry time is best for your trading style. I will also be covering an episode on expiry times in the 200 series, probably towards the end, near 210 or 211, somewhere around there. I'll probably have an episode for expiry times. But just before we end off, I would want to show you guys what I mean by zooming out on a chart. So I'm going to switch to MT4 now. This is the Euro USD 5-minute chart. The blue lines represent 30-minute expiries. So if you can, as you can tell, this is the last couple hours. So this is 4 p.m. and this is 11 a.m. So roughly 4.5 hours, which is a decent amount of time to watch charts, but it's not that great because you don't know what happened before this in the day. So this is what I meant by, you can see this is the 5-minute chart, so you would be trading this for the either the 15-minute expiry or the 30-minute expiry, which is why I put the blue lines. Those are 30-minute times. So then you can see if you enter like somewhere here, you know how far you have left before expiry. But the point I was going to get to is zooming out. See, if you have this, you're looking at the chart and it looks like it's ranging, but how much is this price range relative to the day's action? So zooming out once would show you this, and so this tight range relative to this big action here is not that much. Zooming out again would show you this, and this would show you this is a small tight range relative to something you thought was big, but it's actually small relative to that. So the daily range is really small. So you see this big move, and then it's consolidating here. So that's actually a really small range. But if you were looking at your 4-hour time frame, or 4-hour time range, I mean, it would just show a normal, you think it's a lot of action, but it's not actually that much. And this is pretty much the last point before it turns to a bar chart, because if you zoom out one more time, it will look like this. And at this point, it's not even candles anymore, so that's pointless to look at that. It's best that you go to the last point, which is like that, and then you should be fine. So that's it for zooming out. That's all I plan to cover in this video. I won't go through any actual examples with expiry times. That would be saved for the other lesson in the 200 series. As usual, my recommended brokers are 24 Options, Bank the Byron, and Trade Rush. And as usual, the tutoring promo is always running, so make sure you sign up using my links in the description below to get an hour of free tutoring with me. You can see the full details on my site. I hope you guys enjoyed this video, and I will see you guys next time.